picking up good vibrations.
Hi everybody, Alex Employer from Expert Forex, and in today's video we're going to look at a very special trading technique that makes my wife very happy. Now there's a lot of expressions that go around like a happy wife, a happy life, money is the ultimate aphrodisiac, and so on. But when it comes to Forex trading, life is short and you can do extremely well. You can train yourself to earn considerable amounts of money in a very short time. So your training period is short. You know, doctors take 7 years or maybe 8 years to qualify to become doctors. In Forex trading, you can become a highly competent trader within 1 year. So your return on effort is fantastic in Forex trading. So let's go into this technique that I'm talking about. On your screen, you can see a process for trading robots successfully. And I'm not going to go through this process in a lot of detail. If you want to, you can freeze the video and read through it. But essentially, the process is one of learning from your mistakes and improving them on a consistent basis. Now, the most important part of this process is this particular one. To do this, demo trade 20 strategies for 3 to 5 weeks to see which strategies perform well and which ones do not. Make consistent changes to the settings that you are using based on the trades that are taken. Now, yesterday, while I was having my coffee and dunking my Oma in the coffee, I realized that this is the major assumption that I take for granted, that people are able to make consistent changes to the settings that they are using based on the trades they are taking. This is an assumption I made because when I was training and when I was developing my trading skills, I was lucky enough to be in a group of traders where we took losing and winning trades one by one as a group and brainstormed how could we make this trade better? How could we have done better, got a more positive result? How could we have avoided a stop loss? That kind of thing. So we brainstormed and we did this over and over again. And the beauty is we did this over weekends when there's no pressure, time pressure. So we actually analyzed our trades, and by doing this consistently over and over again, we came up with strategies that were absolutely fantastic. Now, again, as I say, I've made the assumption that the average trader can do this. Now, you will see when I start going through the kind of changes that we made, they are all logical and common sense changes. You don't have to be a trading expert to see them. And that's how we developed. We weren't experts at the time. We were far from that. We had just done courses and we didn't, we were still learning the process. So we taught ourselves through this process. So my philosophy has always been, let the market teach you how it wants to be traded. And I've seen this mistake being made by people. They go on a course, they learn about Fibonacci ratios and all that kind of. They come out of the course and they try and impose those techniques on the market. They say, this is the technique I am going to make $1 million from, and so on. Now, what they're essentially doing is they're imposing their ego on the market, and the market looks at them and says, hey, I'm bigger than you, and it gives them a big whack. So what you have to do is you have to go to the market and look at the charts and say, how do you want me to trade you? But it is the thing that is the difference between winners and losers. So how do you communicate with the market? You communicate by looking at the charts, spending a lot of time on the charts, but not particularly just looking at them, looking at your trades that you have made on those charts. Very important. You have to look at the trades that you have made and ask yourself certain questions. I'm going to list those questions for you. So here are some of the questions that you need to ask yourself, and only ask yourself after you've done 20 trades. You can't do it on the one trade because that is over simplifying the thing. You have to have a trend, something that's happening consistently over 20 trades. So trade 20 trades, then come to this checklist and say, all right, are my targets and stops too big or too small? Now, a lot of people say, how must I know that? You look on the chart and you see where your stops are and where your targets are for the transactions that you made. So if your targets are too big, they won't be reached and the price will turn around before that reaches the target. If they're too small, they will be reached, but the price will run on another 50 pips. So a lot of these things are not rocket science. They are common sense and logical, but you develop that by looking at the charts and asking these questions. Are my stops too big or too small? Now, I can tell you, in the beginning when I traded, my stops were way too small, way too small. And what happens when you have stops that are too small? Your accuracy or your success rate drops tremendously, right down to 30%. The minute you double your stops, it goes up to 70%. So stops that are too small are a problem. So you have to ask yourself, are my stops too small or too big? If they are too big, it means your return on your risk will suffer. So there is a refinement that needs to happen. And as I say, you have to do that over 20 trades. So if you find 9 of your trades are too big and 11 are okay, then you need to think, well, maybe I can improve myself by improving those 9 that were too big. Anyway, so let's move to the next one. Are you entering and exiting too early or too late? Now that again is that information you can only get from looking at your trades on the charts. You can see clearly if there's been a trend. Did you enter that trend too late or did you enter it too early? And then you have to change your settings to get yourself into these trades earlier or later. It's just as simple as that. And the same applies to exits. Are you exiting too early or too late? Now, exiting too early is a very common beginner problem, but you should ask that question and look at the chart and say, look, I clearly exited here and the thing ran another 50 pips or something like that. And this checklist is really critical. And it's a simple checklist. As I say, you don't have to be a trading genius. It's quite obvious if you look at the charts. Well, is my lot sizing too big? Now, that's a beginner's problem. It's a very easy thing to solve. Just always trade with the smallest lot size you can and then slowly increase it from the smallest. Don't just go into a big lot sizing. All right, now the next one. Is the direction wrong? So you've done your 20 trades and 12 of those trades were trading in the wrong direction. So you need to evaluate that and say, look, maybe I should actually reverse the direction of my trade. Reverse the logic. If the logic says buy, then you sell. As simple as that. There's nothing wrong with that. The market is telling you how it wants to be traded. You've got to listen to it. All of this is the market talking to you. So your settings are too aggressive for the instrument that you're trading. Now that is one where people often don't relate their settings to the volatility of a currency. Now, for instance, the pound Australian is one of the most volatile currencies. It travels around about 150 pips a day, and you cannot use the same settings as you use for instance, the euro, that might only travel 60 pips a day. So you have to relate your settings to the instrument that you're trading, and that's another question. Am I relating my settings to the volatility of the instrument that I am trading? Then you are trading the wrong, you could be trading the wrong instrument. Now, there's a lot of guys out there that say, I want to trade gold. Give me an EA that trades gold. They are so focused on a particular instrument that they don't look at the other opportunities that are out in the market, and often the wrong instrument gets traded for various reasons. Gold, for instance, is notorious for having different settings from each broker that offers it. So it could have different margin settings, it could have different pip values and so on. So it is one of the trickiest currencies to trade. Or you could be using the wrong time frame. For instance, certain strategies work good on a 1 hour time frame, others work good on a 15-minute time frame, others work really well on a 4 hour time frame. And it takes time to work out which of those time frames work best for the strategy or the robot that you're trading. And then, etc. For instance, those 7 points that I've mentioned are the main points, but there are a few refinement points after that. But as you can see, you don't need to be a rocket science. All of these things are you using your common sense and logic, and you looking at the charts, looking at the trades on your charts. Okay, so here I have a chart open at the moment, and what it's showing are the current open trades, but we're not really interested in the current open trades. We're interested in the trades that have happened. Now I'm going to show you two techniques that will show you how to see the trades that have happened. So the one is you go to your accounting history. There we are, and we'll just go down to the most recent closed trade. There we are. All right, let's go over there, and now let's see. If I want to see the most recent or any particular trade, all you do is you highlight it and you drag it onto the chart, and there it will appear. And it was a buy. In this case, it was a buy, and it went up and hit the next grid level, and it went out at a nice positive trade. So there you can see the actual trade on the screen. Now this is a trading robot, so I won't go into too much detail, but there are questions like, is the gap size too big or too small? Those are additional questions that you could ask, and so on. And was the lot sizing used for this particular transaction good? And all those kind of things. So there are questions you can ask about that, but this one looks pretty good. It actually caught the top spike of that candle, and that in that case the grid size was pretty good. All right, so that's how you see one trade on the screen. You can analyze it and look at it. Now let's say you want to do all the trades. So what you would do is you'd go in there, highlight one of them, and this time you click down on Shift and hold it down, and you pull it up onto the screen again, and then all your trades appear. All the trades appear that, and there is the original one that we were looking at earlier, but now you can see there was a buy and a buy there that was closed over there. There's a sell and a sell that was closed over there. There was a sell that was closed positively over there, and you can go back and read the chart, and you can see the trades that were taken. So I thought I'd let you know about this particular technique that I use to see all the past trades. Now sometimes you will see them automatically on your chart. Other times you need to use these two techniques that I've shown you. The one where you drag one trade onto it, and the other one where you drag all of the trades onto it by using Shift, pushing down on the Shift key. And I hope you've learned something from this video, and that I've given you some food for thought. And don't let it stay as food for thought. Go and apply these techniques. Go and have a look at your last 20 trades that you made, even if it's the robot that did them. Have a look at them and ask those questions that I've just listed there. For instance, is this target and the stop too big or too small, or too early or too late, and so on. And start training yourself to analyze your own trading, and by doing that, you will open the communication process between the market and yourself, and the market will start talking to you. And when that happens, your wife will be so happy, very, very happy, because you will start making considerable money, because you're listening to the market and not trying to impose your ego onto it. So from me, Alex Ploy, cheerio.